In markets like these, it's so easy to feel like you're just getting tossed around. That's why building a trading framework that can handle, well, anything is so important. So, in this explainer, we're going to break down exactly what an all weather systematic approach looks like. It's all about navigating whatever the market throws at you. Let's dive in. So, does this sound familiar? I bet it does. You're looking at the markets and you're just stuck. On one hand, you've got this gnawing fear of a huge crash that could just wipe you out. But on the other hand, there's that FOMO, right? The fear of missing out on a massive rally. It is an absolutely exhausting place to be, and honestly, it traps so many of us. And this is really the heart of the problem, isn't it? The old way of thinking basically shoves you into one of two terrible choices. Choice A, stay all in, and you're just a sitting duck for a big crash. Or choice B, you pull your money out, you sit on the sidelines, and you watch one of the biggest rallies in years go by without you. It really feels like a no-win scenario, a total lose-lose. Okay, so why do we keep getting caught in this trap? Well, the real problem is that we forget what markets actually do. They change. They're not static, they're not predictable, and that means a strategy that was printing money last year can, completely blow up the next. Think about it. Most strategies are built for one specific kind of market, right? Like a nice, calm, steady uptrend. But what happens when the music stops? When conditions suddenly shift? And that's what we call a regime change. That same strategy becomes super vulnerable. It's like having a one-trick pony portfolio. It's almost guaranteed to fail eventually because the only thing you can actually count on is that the market's mood is going to change. And this quote just nails it. Markets don't move in straight lines, so why would we expect our strategy to? We're trying to use a rigid, fixed plan for something that is constantly moving and changing. It doesn't work over the long haul. Your approach has got to be as dynamic as the market is. All right, so that leads us to the solution, and it's what we call an all-weather framework. The big idea here is to stop trying to predict the future. Instead, we're going to focus on building a process, a rules-based process that can adapt on the fly, no matter what the market is doing. So, what is a mechanical framework? It's actually pretty simple. It's just a set of rules you decide on ahead of time, rules that tell you exactly what to do and when to do it. The whole point is to take your emotions, your gut feelings, your opinions about what you think should happen, and throw them right out the window. This is all about discipline and process, not prediction and panic. So, how does this work in practice? It's a simple four-step loop. Step 1, the system looks at the data to figure out what kind of market we're in right now. Step 2, it pulls out the specific rule you've already created for that exact environment. Step 3, it executes the trade. No second guessing, no hesitation. And step 4, it just keeps monitoring and repeating that process over and over. It's systematic, it's logical, and it's totally repeatable. Now, the real magic here isn't just having one set of rules. The true power comes from building a portfolio of different systems. Think of it like a toolbox. You don't just have a hammer, right? You have a whole set of tools, and each one is designed for a very specific job, or in our case, a specific market season. And here's a great look at how that toolbox gets put to use. When we're in a classic bull market, you'd use a long-term trend-following system to just ride that wave up. But if the market flips and goes bearish, well, then a totally different system kicks in. Maybe a mean reversion strategy that's designed for choppy, volatile markets. When inflation is the big story, you switch to systems that focus on things like commodities and energy. And when things get really crazy and stressful, you've got defensive, volatility-focused strategies ready to go, protecting your capital. See? A tool for every job. And here's the most important part. By combining systems that are non-correlated, which is just a fancy way of saying they don't all move in the same direction at the same time, you create a much, much smoother ride. It's like having a team. When one player is having a bad day because the conditions aren't right for them, another player, who is built for those exact conditions, steps up and carries the weight. That is how you reduce those gut-wrenching drawdowns. This is about more than just a different set of tactics. This is a fundamental shift in how you think about the markets. It's about completely changing the goal of the game you're playing as an investor. Just look at the difference here. The old way is all about prediction, opinions, and frankly, a lot of guesswork. It's a game of trying to be right. The new mindset? It's about probabilities, process, and preparation. The focus shifts from trying to be a psychic to just being ready for anything. And this really cuts right to the chase. The focus is not on calling the market.
You have to let go of that need to predict the next top or the next bottom. That's an ego-driven game, and it's a really, really hard one to win.
No, the real focus, the only focus, is on being prepared for whatever the market does next. It's about having your plan and your system already in place, ready to go, so you can react logically without emotion, whether the market goes up, down, or just chops sideways for a year. And when you finally make this shift, the benefits are huge and they're very real. You can actually grow your capital without getting thrown around by every scary headline. You finally get to take that gut-wrenching emotion out of your decision-making. You can seriously reduce those big, painful drawdowns. And maybe most importantly, you can actually stay invested when things get scary, which, let's be honest, is where all the real long-term money is made. So let me leave you with this one question to think about. What if your goal wasn't to be right anymore, but just to be ready? How would that one little change affect every single decision you make in the markets?